Hello, everybody. It's Sunday Q&A day, and we had some breaking news actually happening just as we were kind of getting ready to go live. There's apparently a U.S.-Chinese trade deal announced in Geneva. We don't have details yet, but it looks like they will have a press conference tomorrow morning. And immediately, it was kind of weird because I heard this and I was watching the Bitcoin price. It didn't move for about 20 minutes and then it went up. So Bitcoin's up about $700-800. It likes the trade deal. If there is something good coming out of this, the markets will do very well tomorrow. So very exciting. And thank you, Iron Forest and Matt P. Shifty 500 for coming. This is not financial advice. This one's a little bit different. As usual, I cover the top questions that you all have on your minds, and the questions come from Patreon. Let's get into the big day, however. In the United States, it's Mother's Day. I know it's different in other parts of the world, but happy Mother's Day to all the wonderful investor moms and moms out there. First question from SoftServe. First time submission. Grateful for all the guidance and vision you provide. Two brief questions. First, for Bitcoin and 1,000 Sol in the cold wallet, best place to stake Sol. Lots of questions about staking Sol. Interesting. Historically, I've been my own custodian for crypto. I get phishing texts and emails daily. Yeah, and phone calls and all that terrible stuff. The scammers are really, really ramping up. Everybody careful out there. If I sell Bitcoin and put proceeds into a Bitcoin ETF, the tax consequences of the sale are substantial. If I wait for Bitcoin to double, the tax consequences are double. What is the cost-benefit analysis selling Bitcoin and buying the ETF equivalent versus continuing to self-custody? This is, again, a lot of questions here. I'm going to take it in a little bit of a different direction. First of all, so many places to stake Solana. Just Google it. Google top validators. Google, what are some of the other key places? Go to Solana Beach or stakingrewards.com and you'll find some of the good places. And remember, mix it up, place it all around, like 10% here, 10% there, etc. That's always safer. And remember also there's a lockup period for stake Solana, about 2 to 4 days, a cool down. So plan your liquidity. Next, self-custody Bitcoin, pros and cons. And I hear you. A lot of people have moved to the ETFs. I saw this early on with on-chain data. I was wondering why people were selling. Long-term holders selling before the halving. And my theory was they were moving to the ETF for safety. But it's always good to have some cold storage Bitcoin. You got full control. You have this concept called go bag. So if anything really does go wrong in your country, you have the ability to up and leave and still own your possessions like Bitcoin. And a cold wallet also mitigates phishing risk. And the simple rule how not to get scammed is don't give anything to anybody. Don't click on any links. Be careful, but they're getting very pushy these days. Now, the cons, of course, self-custody. You got to be responsible. And one single mistake, poof, is all gone. So there is a lot of worry there. Now, regarding taxes, whether sooner or later, it's actually an interesting factor because I did some calculations myself on some rotation between assets. I've got one asset, which is, 95% pure profit. So if that asset's trading at $200 or $500, it has a huge impact on taxes. And that's one of the reasons why I didn't sell it at $500 because I didn't want to take the huge tax hit. The other angle, though, I like what you're saying, is it better to tax out if you're going to go down that path earlier than later? The answer is, does it really matter? At the end of the day, it's 20%. So if you can time it right and do it low, yeah, it makes sense. But even people like Plan B did it. You do take a tax hit and you do give up direct ownership moving to an ETF. But there's a new exciting thing. This is kind of the new frontier stuff. And I find this very fascinating. Once I had literally a very short window of time. You guys remember last week, Like I got into CEP, and then I heard about this asset, which is Strife from Vivek Ramaswamy, and I said, this is really interesting because what people can do, people like Peter Thiel and others, it's asset Strive is going to be a new corporate holding company similar to MicroStrategy. Technically, theoretically, not sure of the actual wiring yet, you could transfer 4 Bitcoin to this company and you get a stock equivalent because it's structured as a 351B transaction, which will defer your capital gains tax on this, and you receive stock with a carryover. And if you sell the stock later, maybe you'll pay capital gains on that, of course. But that is kind of the interesting angle. One of the new frontiers that's coming out. Like, it is stunning to me to see all the innovation around Bitcoin financial jujitsu these days. It's incredible. And everybody wants to follow the MicroStrategy playbook. They could have done it in 2020, but now all of a sudden it's a bona fide strategy to go follow. So everybody's trying to do it. So I really like this new asset thing, especially for people that have a lot of Bitcoin, you know, OGs from way back in the day, like the Max Kaisers of the world. They could have 100,000 Bitcoin or more at a cost basis of less than $10. You know, it would be logical for people like them just to throw a little bit into this Strive company tax-free, and they get ownership in an equity firm that could have the performance like MicroStrategy. I don't think anything can have the performance like MicroStrategy because that was a, you know, first mover advantage, but we'll see. Now, long-winded way, it's a complex question. I'm not a tax accountant, but quick summary. Your net proceeds, if you sell your 4 Bitcoin, I assume it's long-term capital gains, you pay 20% taxes. Your self-custody, you get, you know, assuming it's 400K right now. Bitcoin's 104,600, so I assumed it's 100K for simplicity. Self-custody, and if you sell out, you get 320K, and you pump that into an ETF. But self-custody, you still have the phishing, and you don't get any yield. With the ETF, you got fees, you got custodian risk. But this asset, Strive Company 351B, you get 400,000 value and 0 taxes. But there is, of course, new forms of risk, company risk, tax complexity. So I suggest what I like to do is do a little bit of everything. Keep some in your go bag. You know how to use cold storage. Move some to the ETF, time it right around taxes. And maybe if we see how the wiring is done for this Strive asset company, it might be worth throwing a bit in there too. We'll see. Mix it all up. It diversifies the risk and hopefully optimizes the return as well. So I hope you enjoyed that question. Hope that helped. Next question is from Alex, 1407. A 35-year-old school teacher living in Germany. You have 1,700 euros to invest per month, seeking financial freedom as fast but secure as possible in 15 years would be okay. No active trading. Best would be a set and forget plan in what to invest and how you would structure the investment per month. FTSE ALL World ETF, Tesla, NVIDIA, MicroStrategy, Bitcoin, separate. What would be your 1,700 monthly invest portfolio choice to retire early? Well, given these parameters, as we showed this week, the power of trading is quite exceptional. You know, you jump on the CEP bus early, that thing goes to the moon. Within 2 weeks, you sell out of that, you move to another one that triples in 2 days. It can be astounding. But then again, your parameters are no trading, and I'm just going to do a little something because this is interesting. Now I'm going to make some assumptions, and for simplicity, your $1,700 a month is about $2,000 a month, which is $24,000 a year. So I converted everything to US dollars because Bitcoin primarily is denominated in that. So I hope that's okay with you. And we're getting it out of the euro. And also, you're probably, if you're investing in things like Tesla, you're comfortable with US dollar denomination. Anyway, I also assumed in this model, your salary goes up 3% per year, and just 2 assets. I don't do ETFs. Some stuff is kind of risky, and you want low risk, safety. And I only went out to 2035 too, 10 years, because I believe in 2035, everything could be completely different, if not a hell of a lot earlier than that. And I assumed linear growth with terminal price, no bear markets. So they are some of my assumptions. And high level, over 11 years, you will invest $307,000. Your total sum by 2035, assuming Bitcoin and Tesla continue to grow. Remember, all of these can go to zero, okay? But I did sandbag it as well. I put in the 2030 to 2032 price target out to 2035, heavily sandbagged. You will have $2 million. What does it look like? Here's your quick table, your quick DCA, starting with 12,000 a year. So what I did, just for simplicity, and I'll share this table later on Patreon. You can all have it, play with it, create your own version. But I just did your DCA of 2,000 per month, broke it out 50-50 between Bitcoin and Tesla. And you can plug any numbers in here, but what's MicroStrategy going to be trading at in 10 years? Who knows? Who knows if it'll even be there? We don't know. We don't know if Tesla will be there. We don't know if Bitcoin will be there. And that's why you always have to keep your dancing shoes on and be ready to pivot in the event something changes. All right. So basically in the first year, 12,000, you get 0.12 of a Bitcoin, assuming the price is stable. And then I index the price to get to the terminal value of 1.5 million by the year 2035. And you can see over time, the amount that you actually buy for Bitcoin decreases every year. But at the end of 2035, you'll have 0.52 Bitcoin. And that times $1.5 million is 780,000. Now, it just shows you the power of DCAing and getting into things early. Imagine putting 12,000 DCA per year into Bitcoin a couple of years ago. Like, I remember it was possible to buy 3,500, 4,000. We had so many opportunities to buy at 9,000 for a long time, even 15.5 a couple of years ago. So again, it's more expensive now. And then Tesla, same thing, 12,000 a year. Assume the price 300 now, 417 next year, 580 the year after, et cetera, et cetera. Terminal price is $8,077 in the year 2035. Could be an awful lot higher than that. A lot of people expect $10,000 by the year 2030. And that will give you 148.73 shares, which could be worth about 1.2 million. So when you look at these two combined, you've got your 148 shares of Tesla and your 0.52 Bitcoin. That'll have a total value of about $2 million, 1.2 million in Tesla and 780,000 for Bitcoin. And a visual of what this looks like and how it grows over time. Let me turn myself off. You will see here the growth and the miracle of compounding. Again, Alex, you're DCing in $1,700 a month. Call it $2,000. That's 1,700 euros a month, $2,000, which is 24K a year. And that becomes a $2 million bag by 2035. Now, if you trade, or if you do other creative things like DCAS, you could get there a lot quicker. So this is just DCAS going back to 2017. Same thing. You're spending $1,200 every 2 weeks. You basically, instead of having 12.5 Bitcoin, you'd have 32 Bitcoin, and your ROI would be 640% versus, or it would be 1,012% versus 640 just straight DCA. So if you are planning a DCA strategy, think about DCAS too. It'll get you to your goal faster. Okay. Next question was a super interesting one. Shout out. We're just going to call this person Dr. S. They had some information which I had to delete the original thing because they were, doxing some sensitive information. So this is kind of a quick scrape of the situation. But this member is deeply concerned. They've been following me into some Tesla leap buying, and they bought a lot of leaps. And they're worried because I always talk about the infinite money glitch. How can they literally, after these things convert, do they have enough cash to buy the shares out? And Dr. S has, well, let me read this. I have the following leaps on Tesla and fear when it comes to expiry. I will not have enough margin to convert my leaps to shares like you always do. Let me know how much I need. I currently have $280,000 margin based on Tesla shares. So this person has Tesla shares and Tesla leaps, going both, kind of what I do too. Let me know if I'm going to make it. Positions are as follows. I have 3 leaps. These are all out to the end of 2026, December 2026. 3 of the 155 strike, 1 at 160, 8 at 160, and 3 at 230. Interesting. And the amount of premium that they spent, etc., the total amount of premium. The question is, how much would be required to convert these? And I broke it all out. So let's look at some tables. First of all, let's talk about the margin aspect first. If Tesla goes to $650 by December 2026, your margin, okay, will be worth $607,000. All right. So just so you know, I backed into how many Tesla shares you have. I estimated it's about 1866. Total value of the Tesla shares at $300 is $560,000. Your margin on that is half, 50%. If you have a typical brokerage firm, you get 50% margin. So you have $280K in margin available to buy stock. If the price goes to 650, same number of shares. It assumes you don't buy any more shares between now and the end of 2026. A total value would be $1.213 million, which will give you $606,000 of margin. Now, what happens if Tesla is $800 by December 2026, which many people believe is possible? A lot of people are calling for $650 price at the end of this year. So that would just be a small increase from there. And remember, 2026 and 2027 are when things really kick off for Tesla. So if the price does go to 800, you have 1866 shares, your value would be 1.5 million, your margin would be 746K. So that's the good news. Now, the cash required to exercise your Tesla leaps is only 260,000. Okay, 300 exercise at 155, 100 at 160, 16 grand, 800 at 160 is 128K, and 300 at 230 is 69K. Add that all together, $259,000. So the good news is you are in a good shape. Now, the margin required to exercise the Tesla leaps is 130K, but you will have somewhere between 300,000 and 600,000 of margin available. So you're actually in a position to buy more leaps. You don't have to be worried about not having the margin to buy them. You can actually buy a load more leaps because I estimate you're going to have at least 300,000. So you could more than double the number of leaps that you have, assuming the strike is, of course, very low. These were the good old days when we could buy leaps very, very cheap, but I don't know how much of that is available right now. And the other thing that we're very excited for, and you probably know this chart as well, things are about to go exponential for Tesla. This is from AJ and your AI work. But basically the Tesla earnings per share is going to go to the moon. And the rate of growth is what drives the PE ratio. So easily, if markets look forward a year, early 2027, people should be looking at an $800 stock price. And therefore, this $800 here by December 2026 is not beyond the realm of possibility. And you will have 746K of margin. So the funnest part of this is this. Doctor, your infinite money glitch is activated on Tesla. Yay, well done. All of this. And again, what I always do is I buy leaps at extraordinarily cheap prices, and I convert that stock, and then I use the equity and the margin to do things like sell puts. And that's my infinite money glitch. So you have arrived. Well done. Next question from Evo. What are your levels for CEP, which is the Cantor equity play on Bitcoin following Bitcoin MicroStrategies, And now asset, which I mentioned is Strive. I won't chase, but if the macro weakens enough, I'll snipe. Is it purely a short-term play, not financial advice? So I'm going to have a little kombucha yesterday. Maybe it's spring. I don't get allergies, but definitely something's going on. So Evo, I got some interesting news about this one. First of all, if we look at CEP, Cantor Equity Partners, I mean, this thing has only been around a couple of weeks. So it's impossible to determine levels on LILO. It's just simply not enough data. You can do it, but it's too tricky, too new. And we don't quite yet know exactly how many Bitcoin they're going to have, what the share dilution is going to look like, what the growth plans are, what the NAV premium will be. This, unlike MicroStrategy, I can't tell you. And same thing for asset. It's only been around 3 days. 3 days and went to the moon. So that was the fastest triple I think we did. We did a triple on that within less than 2 days. In fact, it was just a 124-hour period. Anyway, these things are crazy. There's no telling where they're going to go or where they'll end up. We need them to stabilize a bit more before we can crunch some data and numbers. So Evo, sorry, I don't have an answer for you on that one, but these things are fun to play. And as I mentioned in the very first question, this asset, this Strive firm with their 431B or whatever it's called, the ability for people to send their Bitcoin in and get shares without incurring taxes is super interesting. So watch the space. Next from Anson. Hey, James, very basic question here. The NAV on MicroStrategy is now 2, and Saylor wants to keep it that way. Does that mean that if there are no more increase in the NAV, the stock will have almost exactly like Bitcoin, behave exactly like Bitcoin in the future? It would no longer outperform. So this is a great question. First of all, this is, what we've been talking about since 2020. This is the financial jujitsu. This is the accretion of Satoshis per share over time. As they issue something, say a share of MicroStrategy for $2 or for $1, and they buy $2 worth of Bitcoin with it, whatever way you want to think about it, that's what they do. They have a leverage strategy. They have now all these different instruments, Strife and STRK. They have convertibles, they have ATM, and they are growing their Bitcoin per share all the time. And remember as well, it's very important that MicroStrategy stock moves 2.7x times Bitcoin's price due to leverage and growth. And if you look at the gainers for MicroStrategy, it's up 2,700% in a little over 2 years. Okay, crazy. And people are still saying, oh, it's going to slow down now. Well, it hasn't slowed down yet. And this is the magic of what they do. This is my share accretion chart. Since 2020, since September 2020, the amount of Satoshis per share has gone up 8.2 times. Okay? And you multiply that by the price increase of Bitcoin. And again, this is why if you can get in early and hold those shares, and as they continue to do Bitcoin accretion, sats per share number go up. And this goes back to exactly what we said here. Getting in early to things like this, asset, which is Strive, or CEP, could perform quite well. We don't know yet, but it'll be interesting to watch. But this is the magic of what Saylor does. He calls it yield, Bitcoin yield. And that is why it's so important. I'll share this one later as well within Patreon. But it's magical. And yeah, the gift that keeps on giving. Oh, by the way, I think Saylor did ATM last week, so he'll announce again another buy on Monday. Therefore, this chart needs to be updated then too. Next, from Henry Eastwood. Hi, James. I want to convince my wife to move away from treasury bonds. She wants safest investment option for a doomsday rainy day situation, not real estate. There is no way on earth she's willing to handle the volatility or high risk of any of our favorite Tesla, MicroStrategy, Bitcoin, etc. usual suspects. Would it be then an interesting option for her to allocate as much capital instead to STRK, or does it give a guaranteed 8% yield per year? Great question. And now everybody is interested in not only just I call it STRK, STRK or STRIFE. These things are phenomenal, and they are disrupting that $300 trillion debt market. Okay, think of all the insurance companies and banks, etc., that need this yield. So first of all, let's not talk STRK. Let's talk STRIFE preferred. It's now 10% yield, perpetual bond, publicly traded. Anybody can buy a bag of this tomorrow. You don't need to go through all the traditional channels to get access to that type of stuff. It's super easy. You can jump in, you can jump out. You could move to this in a bear market, for example, and still get your 10% without any downside. So that is basically going to change everything. So the other thing is there is risk for STRK and STRIFE because Bitcoin is volatile, and MicroStrategy can take the price of Bitcoin falling before they start losing money down to about 70,000, which could be the floor. If you look at history, the November 4th day every year is considered the bottom for the next bear market, which Bitcoin is about 69,000 at the time. So maybe that could be, if history repeats, the new bottom for Bitcoin, if there is a bear market. However, a serious crypto crash could impair MicroStrategy's ability to pay dividends or principal, and that would torpedo the price of this. However, MicroStrategy can issue shares to pay this dividend, so it's not a problem. And in fact, they ATM pretty much every week just to buy more Bitcoin. So again, I wouldn't be worried. I think I think anybody investing for a 4% yield in a world where there's so much debasement, they just need to be aware of exactly how their fiat is going to zero. Yeah. So hope that helps. Next, from BP03. My wife and I are strongly considering selling our house and renting, not repurchasing, with the idea of deploying most of our equity into Tesla and Bitcoin. We have just under 100 Tesla shares and 0.37 Bitcoin, and I'd like to build our bags to hit the retire on targets before things take off, specifically with Tesla. We would have approximately $500,000 in equity, conservative estimate after all is said and done. This would be a 3 to 5 year plan, at which point we would consider purchasing a home to have stability for our family. And we know this could be life-changing for us. We live in Canada and have 2 young kids. We'd love to know your thoughts and how you weigh in on this decision. Thank you for what you do in the community. This is a tough one. And yeah, if I could snap my fingers and get rid of my real estate and pump it into the markets, and then snap my fingers and get real estate back, you know, it's just that whole issue of real estate is not liquid, and there are so much more faster horses out there that it's tough. But owning a castle is also so important to everybody. Yes, it's not going to make you as much money as other disruptive assets, but it is important to have. So I'm going to start off with a quick table of the pros and cons I see for you and your family. And I love what you're trying to do for your family, and, you know, kind of jump out of real estate and then jump back into it. There's a kicker to this plan, which could actually work. But first of all, I'm going to share some kind of hard truths. Excuse me. The pros of this: you could get very, very high returns. As I mentioned, Tesla's going to kick off. And the stuff I'm seeing happening now with Bitcoin treasuries is melting my brain. And yes, Tesla and Bitcoin will outperform real estate. And yes, it would allow you to get in early, kind of on the low floor, before really AGI comes to the fore, which is going to happen. The next 3 years will be bonkers. You also have flexibility while renting. You don't have to deal with maintenance, responsibilities, etc. You can focus on your investments. Liquidity: stocks and crypto can be sold quickly as well. If the market does kick off, you could actually sell out and then maybe buy it back in. And you have a simplified lifestyle: no property taxes, repairs, mortgage interest. You just know what your rent is, etc. Now, a 3 to 5 year play will allow you to capitalize on what I believe is the disruptive golden era. The things that are going to happen over the next coming years are going to be incredible. We're already seeing it happen. And you hear me talk about my AI impact posts multiple times a week. It's staggering what's going on. So yeah, there's also another angle. Before I get to the cons, I'll jump out for this one. If you are in the market for, it sounds like if you're making $500,000 equity in your home, you probably have $1 million home, which means you're in the market for a very fancy house. 3 to 5 years from now, I think the amount of very expensive houses that hit the market will be very high. Therefore, you'll be able to buy a $2 million home, probably for $1.2 million, because a lot of the young generation won't have the type of capital to pull off what you can do. So technically, you could exit the real estate market and then jump back in 3 to 5 years, when those that don't have Bitcoin and Tesla will be at a serious disadvantage. So that's kind of one idea. But let's get to the cons here real quick, because that's more important. There's a high risk of loss. I mean, both Bitcoin and Tesla could go to zero, and then you lose your $500,000 and you're homeless. Okay, that is something you really need to consider. Also, rental instability. Landlords can be terrible. They can jack your rent, make it way more expensive than owning a home. And Canadian home prices. I don't know what the Canadian market's going to do. But if they do change certain rules up there that I've heard whispers around different things, I'm not Canadian. I don't know exactly what's going on. But there could be a risk. You might not be able to buy back into the market, or the market could completely tank as well. It could go both ways. And lack of diversification too. A little more diversification would be better and safer too. Like, you can put small percentages out on very risky assets and get huge returns, like the ones we just mentioned, like Strive and CEP, etc. Also, regarding your family, 2 young kids, not having a permanent home, a castle, etc., maybe would take away from stability for the kids. I don't know. And no safety net. If the investments fail, they have no home to fall back on, risking financial ruin. So the kicker here, and again, I'm just thinking out loud, I don't know your family situation. What you could do maybe is, instead of getting out of the real estate market, downsizing, buying something, staying in the market, but pulling equity out of your home, or getting a home equity line of credit and investing that as well. They are the options I'd probably consider, but everybody needs a castle. So I hope that helps from a guy on the internet. And this week, we donated to Foxy the chimpanzee in Chimpanzee Sanctuary Northwest. And this is an interesting one. She doesn't pay attention to many toys, but adopted a troll doll. A troll doll. We all know about trolls on the internet. Shortly after arriving at the sanctuary, now she's rarely seen without a troll, Dora the Explorer or Strawberry the Shortcake doll. And that's cute. That's a little pink, purple-haired troll thing, and it's cute. So thank you all for helping make that possible. DCA is tomorrow morning. Agenda will be up shortly. It'll be fun. So with that, everybody, let's get into some questions. And don't forget to subscribe. Let's go back to the beginning. The new frontier of investing. See what the questions coming in and what they're like, what people are thinking about. Bitcoin, 104,600, looking really strong on the news of a potential Chinese deal. So, well, fingers crossed, all is good there, and that happens. Let me see. Questions from Doc Intern. What is your end of year price prediction for MicroStrategy? Haha. All right, let me give you some numbers on that. I have to pull up a model. Our calculator. Here. All right, and I might be able to share this in a tab. Bear with me, because Doc Intern, you're so cool. So here, go away. All right, this is the model. Now, let me try share this. Hold on. Juggling too many things. Share screen. Didn't I? Boom. Share. All right. Let me see if that's working. Yes. So this is my ARB model. I'll put myself on the bottom right. Let's go to some prices. If I believe my bank price prediction for Bitcoin since 2023 was 120K this cycle, right? If the NAV premium stays at 2 and MicroStrategy doesn't add any more Bitcoin, currently it's 450, that would take the price to $487.59. But they will be buying more Bitcoin, which should make this a little bit higher. The question is, what happens to Bitcoin? I think a little bit of a bullish target will be 136K. That'll take at a NAV premium 2, 552. And if things really kick off, let's go 150 here, not 170. I can't change it because I'm viewing, but you get the idea. So let me see, 120 to 280, but about 160. That would take the price around somewhere between 2422. That would be 650, 690, 600. Those types of time frames. It all really is a function of how high we go within how high Bitcoin goes, and then what the NAV premium is. But I think 500 should not at all be beyond the realm of possibility. And the stuff they're doing with all the different instruments is just out of control. It's basically brought about so much demand for MicroStrategy stock. People don't understand. Why are people buying MicroStrategy when it's trading a NAV premium too? It's because it's got 20 other derivative instruments around the product, okay? And if they start penetrating the debt market of 300 trillion with the STRK and the Strife, STRF, it's game over. Game over. Remember, Bitcoin is a piddly asset. A MicroStrategy is a 20th of what Bitcoin is. Put those two together, the future's bright. So, Doc Intern, hope that helps. Jimmy God, 100 men versus one silverback gorilla. 100 men, surely? It depends. It depends how courageous the men are and how tactical they are. Like, this is a very interesting question because it takes me back to jiu-jitsu. I always mention jiu-jitsu because it's kind of a special fighting style, and used to see tiny little Brazilian guys take down like 300-pound men. So the other one is the strength and the injuries and the fear of the humans. If the humans did the clever thing, like in the Gladiator movie, team up together and join forces, we'll see what could happen. And of course, the gorilla would run our team, but I hope that would never happen anyways. But I get asked weird questions. South Bay Products, thoughts on buying spot Bitcoin with Fidelity Crypto versus Fidelity ETF. Yeah, you can do that. And it's funny because of all the names out there, Fidelity is one you can trust. Zero affiliation, of course, with any of these companies, but Fidelity has a very excellent brand. They are OGs in the Bitcoin space. They've been mining Bitcoin for nearly 10 years now. And yeah, I would trust them more than most. Middle class investing. If you wanted to morally spend your money in a war-destroyed place like Gaza or Syria, what would you build? I don't know anything about these places. And I don't know. But I do know that, you know, some of them are in very beautiful areas, you know, on the waterfront. But I really don't know. I don't know. Like, real estate is very location specific. And unless you've been to those places and spent a lot of time in the markets understanding, you know, locations and permits and construction codes and cost of building, it's impossible to say. And thank you as well for your super sticker, Martello45, Music Lover X21, Iron, Nick M, Forrest, Mr. Mostly Harmless, French Dreamer, Polly, Matt P, Salt Strider, Adam Q, and Dude Travels. Thank you all for coming. I hope you enjoyed the show. New frontiers. We have so many options. What to do? Do we hold real estate, or do we sell it? Do we buy disruption? Do we go all in Bitcoin, or do we mix it up? And I like faster horses, but I also like to manage risk. And investing is very much about balancing risk and reward. And, you know, it takes a lifetime to make it and a second to lose it. So hope everybody had a good show today. I'll see you tomorrow on DCA. And thank you to the mods in the chat too. Team Tesla, Sean Donnelly, K8, and everybody else. Have a good night. Bye-bye.